How's it going, everybody? Stas here. So the stock market had a pretty decent day today. S&P 500 up 9 points, up about 0.3%. On the flip side, the Dow Jones actually was red, down about 90 points, down 0.3%. But it's okay because the NASDAQ came in and picked up the slack, up 124 points, hitting all-time highs, up over 1% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, and I want to dive deeper into the main companies, the main stocks that I'm looking to buy right now as we're getting deeper into August of 2020. And I also want to go over with you guys what I've been doing in the markets as of late and the key companies that I'm watching out for when it comes down to earnings, as many companies, big companies, are still set to report earnings this upcoming week. So if you guys find value in the video, hit that like button for me, consider subscribing to the channel, and check out all of the free links down below in the description box if you want to join our Strive Smart Discord chat, our Facebook group, and if you want 2 free stocks from Webull, those are valued up to $1,400. Those are also linked and waiting for you right down below in the description box. All you have to do is deposit $100 using my link, and you get 2 free stocks, and I also get 2 free stocks since it is an affiliate link. So let's get into it today, guys, starting off as always with the S&P 500, and it wasn't too crazy of a day today. Again, the Dow was red, S&P was up about 0.3%. It was pretty much tech, big tech, doing what it does best, right? You know, carrying the markets, and overall, again, like I said, it was a pretty decent day. S&P 500 clearly still struggling under the old all-time highs, or they're not really old all-time highs. They're still the all-time highs at 33.93, right? That is where we were back in the middle of February. And although, again, we were green today, it is very clear that, again, we are failing to break out of the resistance from last week on the 12th of August and on the 13th of August. And one good thing to point out here, guys, despite us failing to break out completely into the 3,400 territory, which is where I think bulls will come in, right? Despite us failing to do that, I mean, one good thing is we did break out of 3380, right? We've been talking about how the S&P's been struggling between 3380 and 3390, right? So the fact that we took out 3380, which is where we struggled on the 11th of August, that's a good first step that we want to get to all-time highs, right? So we took out 3380, and mind you, we actually held it as a support pretty much all day. I mean, if you take a look here on the intraday chart, all day the S&P held 3380 literally once, twice, 3, 4, 5, and we closed above it at the close. So that makes it 6 times we held 3380. So that's a good sign. And overall, the S&P is just simply trading within a 10-point window as of right now. Take a look. Let me draw this to show you all. This is where we're trading, right? So keep an eye tomorrow on what direction do we pick. Do we break out of 3390 on the upside? If that happens, all-time highs are coming, right? Or do we break 3380 on the downside? Because if that happens, you know, we might not crash. It's not going to be the start of, you know, the next apocalypse, but we might see some further downside, whether it's, you know, 20 points on the S&P, 10 points. I mean, one spot that I think it could get to, you know, if we do see a pull down, that's if 3380 breaks on the downside. You know, we could be going down to about 3330, which used to be an all-time high as well. That would be putting us right around the 50 SMA on this 4-hour chart, and that is about 50 points lower from where we are right now. And quite honestly, guys, you know, with how the S&P's been running, I mean, you guys have to realize the S&P, although it's been consolidating the past couple of days, I mean, we've seen a nice rally ever since the end of July from 3,200, pretty much all the way up to almost 3,400. So we could end up seeing a healthy pull down, and again, a healthy pull down could be around 33.30. So keep an eye on that, and then from there, maybe we could end up getting into, let's say, a leveraged ETF such as SPXL, which goes up whenever the S&P is going up at a 3x rate. And mind you guys, leveraged ETFs, they're very risky. I wouldn't really, gamble with those and get into them if you're not an intermediate to an advanced trader. But if you are skilled in the markets, you understand what you're doing, these leveraged ETFs could be tools, especially these ones that trade against the S&P, the NASDAQ. I like those more, such as SPXL, which goes up and follows the S&P as it goes up. TQQQ is one that follows the NASDAQ. I like these more than, let's say, some other ETFs, some ETNs also that have gone delisted and so forth. I think just TQQQ, like UGAS, for example, TVIX, those got delisted. I think TQQQ, SQQQ, which is the inverse to this one, and SPXL and SPXS, which is obviously the inverse to SPXL. I think those are a bit safer to trade, and I'm just looking at it. Hey, if we get a market pull down, we could end up getting into a, maybe a dip buy in some of these ETFs. And when it comes down to the S&P, another thing that's interesting is Goldman Sachs came out today and actually hiked up the price target, their price target on the S&P 500. And although we take price hikes and, analyst estimates, we take these with a grain of salt, it's still worth watching. I mean, a potential CV vaccine and bets of an economic rebound in 2021 will lift the S&P 500 to $3,600 by the end of the year, Goldman Sachs said, bumping its target for the index by 20% as it trades within striking distance of a record high. And quite honestly, guys, by the end of the year, you got to think about it, that is another, like 4 months from now, I could see it happening. I know it's crazy, and one thing worth noting is the United States election. That could sway things either way, but honestly, I think there's a chance that we rally through the election. And, that could end up leading us to getting to that 3,600 target here by December, January. I don't think it's too far-fetched. Let me know down below in the comments, what are your thoughts there from coming from Goldman Sachs? I would love to know. Now, for the Dow Jones, we're trading under a key level of resistance, right around 28,200, down again, like I said earlier, $90, 90 points on the day here. And it seems like we're straight up consolidating, right? On the 5-day, 5-minute, past 1, 2, 3, 4 trading days, we've been hovering around 27.8 and about $28,000. So at this point, just watch and see what direction the Dow picks. I mean, do we end up gapping up, breaking 28,200? I mean, that could be a breakout on the Dow Jones. Or do we sell off a bit further, break 27,800, the spot that we closed at today, and that has been a support. If we break 27,800, we might be going back down to test 27,500 here on the Dow Jones. And maybe if we break 27.5, we might be going down to that 50 SMA, which could be a healthy pull down overall on the Dow, as it has been straight up rallying like crazy ever since the end of July. Same with the S&P, and of course, same here with the NASDAQ. I mean, it's been on a straight up rally ever since the end of July. It's gone from 10,600 up to where it is now at 11,300, and that's a 700 roughly point gain, which is just incredible. And under, not under, actually a little bit over 2 weeks since the start of July. I mean, that is or August rather. That's a move of almost 6.5%. I mean, that is insane. So at this point, NASDAQ is very bullish, obviously. Ever since we broke $11,000, we've been talking about how that was very bullish on the NASDAQ. We pulled down, we retested 11,000, right? Held that 50 SMA here on the 4-hour chart. And if we zoom in a bit, you guys can see here on the 20-day chart, today we broke 11,280, which was an old all-time high, and it was a double top resistance here stemming back from the 6th of August. So that means the bulls are back in charge, and the NASDAQ could be going higher. I don't know what the Goldman Sachs target is. Quite honestly, I don't really care. I mean, let's be honest. I don't look at price targets like that to make my decisions, but I would be interested, honestly, to see what it is. What do they think? 11,500 NASDAQ, 12,000 NASDAQ. What do they think? But either way, it's not going to affect my decisions, right? I'm still going to be trading the markets. I'm still going to be investing in my Roth IRA every single week, every single 2 weeks, whatever it is, however I feel like buying. I'm still going to be investing in my M1 Finance portfolio, which is linked down below in the description box if you guys want to check it out. These price targets will not end up changing my philosophies, but either way, I find them interesting and I find them entertaining, quite honestly, and as always, take them with a grain of salt. So let me know down below in the comments, what are your thoughts here on the market? I would love to know. What are your thoughts on where we're headed? What are you doing in terms of your stocks, ETFs? Let me know right down below in the comment section. Now, what have I been doing? That's a question I get all the time. Stas, what are you doing in the markets? Well, I made some moves today, and we have stuff to talk about. Let's get to it. NIO, N-I-O, holy crap, guys. They did very well today. NIO went up about 7%, up almost $1. And you guys know, especially if you've been following me since Friday, I bought NIO at $12.76. I bought some NIO at $12.76. On this dip. It actually hit $12.50. That was the bottom, but as you guys know, you can't time the bottom every single time. Heck, you can barely ever time the bottom. It's really lucky, but for me, I got in close to the bottom on Friday, $12.76, and I actually bought more today. I bought more today at about $13.50, and that actually brought my average cost from $12.74 up to the low 13s. I believe it was around $13.10, right around there. And I bought today on this dip. Let me show you guys. We spiked from $13 all the way to 13, I believe, 60. Pulled down to about $13.40, hit this 50 SMA on the intraday chart. This is where I ended up buying, right around $13.50. And like I said, I averaged up on the position, and you have to really gauge your positions and determine whether it's worth averaging up, cutting losses, keeping it as is. And for me, like I've been saying, NIO has been beaten down on solid earnings. I've been seeing it as an opportunity, and I averaged up on it. I thought, I'm getting not an even better deal at $13.50 than at $12.76. But when I was buying at $13.50, I was looking at where we were a couple days ago. I'm like, hey, $13.50 is still a pretty good price to get into, considering we were just at $15, $16, and I think the stock is going even higher. So I ended up buying more NIO, and the truth is, I locked in my profits as well, guys. I locked in my profits. Very quick little 7-ish% I made. Remember, I got in at $12.70, $13.50, $13.10 was my average cost roughly, and I got out excuse me, guys. I got out at about $13.92, if I'm remembering correctly. And roughly, you guys can see it for yourselves. Okay, not a 7% move. It was more like a 6% move. But either way, excuse me, guys. Let me take a sip of water. Either way, 6-7% in a day, a day and a half I held from Friday. That is a very, very good amount to make. I mean, people make 7% in a year, and considering I made that with one trade, that is very good, right? That is very good. It beat my expectations, and I locked in profits, right? I'm not one of these guys that always likes to be greedy, not locking in profits. I'm a believer of locking in profits, having cash on the sidelines, and maybe looking to re-enter. And that's exactly what I'm doing here with NIO. And now that we're talking about EV stocks very quickly, let's go over Tesla. I'm not in Tesla, but Tesla, well, I do own shares in Tesla, but I'm not in as a trade, short-term trading when it comes to Tesla. But today we had a marvelous day. Let's put it that way. That's just being a bit, a bit. What's the word here, guys? Either way, we had a 200-point day today, which is just unbelievable, up 11.2%. And this probably dragged up NIO as well. So thank you, Tesla, for making me money in my NIO trade. But at this point, guys, hit an all-time high. People are getting into Tesla here. as they're getting included in the S&P, as their split is coming up here, I believe on the 31st of August, they're doing a 5-to-1 split. People are really piling up into Tesla, and for me, guys, at this point, it's getting a bit overbought. I mean, we've been calling it out ever since 1400, 1500, and now that it hit where we thought it would go, around 17, 1800, now I'm not touching it, right? I'm not looking to get in. I'm looking to see if it cools off, comes back down. I mean, guys, take a look. RSI is at 83. It is very overbought, so be careful with it. Another stock that I'm in here is GDX. I bought into it today, and GDX, guys, is a gold miners ETF, and they own about 76 million shares in Barrick Gold, which is ticker symbol GOLD. And guess who bought Barrick Gold? Mr. Warren Buffett. He bought it, as we saw in the 13F filing on Friday. He bought around, I think, $500 million worth of Barrick Gold, and that was about, I don't know the exact couple of weeks, but it was like 7 to 8 weeks ago. So by that I mean he could have bought more gold, or Barrick Gold here since that filing. That's what we'll see in the next 13F filing. But what we know is a couple weeks ago he initiated a position, I don't know the average cost, but around $500 million. That's a good chunk of change for the average Joe, obviously, but for Warren Buffett, believe it or not, it's not that much, considering, Berkshire Hathaway has about $130 billion on the balance sheet. But either way, Buffett's buying into gold here. Is that why I bought GDX? No, I've been talking about gold miners, ETFs, gold stocks here for months at this point. And the fact that Buffett's buying in, that kind of reiterates my thoughts, and it kind of backs up my thesis here. And quite honestly, it gives me not confidence, but it gives me, even because I already had confidence in these gold miners, but it gives me even more confidence in them, right? So I'm in GDX here, which is an ETF. Again, it has a bunch of gold miners in it, but Barrick Gold is the biggest holding, or actually no, it might be the second biggest holding, and they have about 75 million in this ETF. So this ETF was up 7% today, and I actually got in around 42.30. So I'm up a good amount on my position. I mean, not a crazy amount, but I bought earlier this morning, and this is quite honestly a swing trade for me. I'm planning on holding and maybe getting out around 44, 45 bucks, but I'm in honestly no rush to get out. This is one that I don't mind holding for a longer period of time. And I also got into CLX today, Clorox, at about $226.80. So I'm right around my cost basis. The stock is right around my cost basis right now. And this is one that we've been talking about. This is a pandemic stock. It's been doing very well. The earnings back that up. And quite honestly, I'm just looking to swing trade it. We're down about $20 off the highs here. You guys can see we are clearly holding the 180 SMA on the 4-hour chart. We're showing a very clear sign of a bottoming breakout here. So I ended up buying some shares at about 226.80, and for me to buy more, I'm going to need to see a break out of 228. If we break 228, which was the high from back on the 12th of this month in August, that could be a breakout signal that Clorox might be going higher, maybe back up to the 230s, mid 230s, back up to the 240s even, which is where I'm looking to sell and take advantage of that strength. So I'm in those. Those three are my freshly made trades, I guess you can say. I'm still holding GLD. GLD is a gold ETF. It's not a miner. It's not a miner stock. It's an ETF that strictly tracks the price of gold. I'm in this one at about 181.40, so I'm up a good amount on GLD. Let's take a look and see roughly on a percentage basis how much I'm up. About 2.5-3% there, so that is pretty solid. I'm also in Upwork, and now that I'm looking at my list, guys, geez, I'm in a lot of different swing trades here. Holy crap, this might be one of the lengthiest swing trade list that I've had in a while. So I'm in NEO. I was in NEO, GDX, CLX, GLD. I'm in Upwork, right? Upwork, UPWK. I've been in Upwork since about 1440, up a decent amount on this position, but I think they're going back up to the $15 to $17 range. So I'm looking, well, more like $16 to $17 range. So I'm looking to ride up this wave in Upwork. I'm also in Netflix, guys. Geez, this list never ends. I'm also in Netflix here at about $495 per share. Down on my position here, not doing too great, but I have faith in Netflix, and I'm looking to continue to hold. And I'm also in Fastly, FSLY. I'm pretty red on this position, despite us being up about 3% today on Fastly. I'm in at about $90, 91, and we're at $78. So I'm down almost $13 per share on my shares. And I'm also in Workhorse, which Workhorse WKHS has been getting crushed here. I mean, this stock is very, very heavily riding on this USPS contract. You know, if they get all of it, some of it, it's going to very, very well influence the stock. And I mean, it's clear that Workhorse is holding $14 to $15 over the past couple of weeks, and we just need to make that move now. Break out of 1640 and into the 18s. That's where I'm looking to maybe take some profits, right? I missed on taking profits a couple trading days ago. I'm kicking myself for that, but it's okay. We can't win every trade. We can't get out perfect timing every single time. You win, you lose some, you win some, you live and you learn, guys, when it comes down to the markets. And I'm in Workhorse at about 1640. So I'm down just a little bit on my position there. So overall, that is what I'm doing in the markets. Let me know down below in the comments, what are your thoughts? What are you guys doing? And when it comes down to earnings, JD.com ended up reporting some pretty solid earnings today. This is a Chinese company, Chinese e-commerce play. They ended up going up about 8% on the day today. EPS came in at 50 cents versus the 38 cents estimated. Revenue came in at $28.46 billion versus $27.45 billion. So a double beat there for JD.com. And quite honestly, guys, at this point, it did break out a pretty big technical spot at 65.50, so that is good, but there isn't much upside. I mean, considering the previous resistance being at around 69, I mean, yeah, we could make a move from 67 to 69, right? That could be a tradable play here for, JD.com, but other than that, I mean, you're pretty much banking on it going to all-time highs if it breaks. I mean, it will go to all-time highs, but you're pretty much banking it will continue going up out of $69 if it breaks there, if you want to get in now. And quite honestly, I would rather see it pull down and maybe some consolidation around 65.60 for a little bit before getting into JD. But overall, solid earnings there, and some other earnings coming up here to keep an eye out on. HD, also known as Home Depot, it was up about 3% today, hit an all-time high for itself. Also, we have Lowe's, LOW, also hit an all-time high today, up almost 3% as well. We have Walmart reporting this week, up about 2.2%, also hitting an all-time high. So you guys see a little pattern here. All these stocks, big retailers, are reporting. Many people are getting into these stocks before earnings. Actually, they're expecting that the earnings will be very good, right? So we're going to see what happens. Am I chasing these? No, they're all overbought, all at all-time high, so I'm not looking to rush into them, but that doesn't mean I'm not watching their earnings. I'm very closely keeping an eye on their numbers, their guidance, and so forth. We also have Target, which is very, very good. I mean, it's been doing very well. We actually called this one out, and you guys know I called it out ever since 128. We talked about how if 128 breaks, which is where it struggled over the past roughly year, I mean, if that breaks, watch out for the 130 push. And what do we get? The 130 push. So watch out for Target. Watch out for Alibaba. They're also reporting this week. What day this week? Let me double check. On the 20th. That is on what? Friday. So Thursday or Friday, Baba's reporting. Another big Chinese company. So if JD did well, I mean, one could speculate Baba could have some good earnings in store. So we might be making a move from mid-250s up to 270. So watch out for that. And another one that I'm watching out for is Foot Locker. It was actually down about 1% today, but overall, Foot Locker came out a couple days ago saying they're going to have roughly 20% same-store comparable sales growth for quarter two. They're looking to pull a surprise profit in quarter two, and the stock ran up on that news up to 35, but ever since then, it's cooled off, right? It kind of sold the news is what the market did, and at this point, Foot Locker could be tuning up, maybe just maybe, for another rally. So let me know down below, what do you guys think about all of those stocks? Are you looking to buy any of these? Are you in them for yourselves? Are you tracking their earnings? Let me know down below in the comments. Now, some other stocks here that are kind of beaten down, and they could be maybe comeback stocks, right? A lot of these are down a decent amount from their highs. The first one is Roku, guys. Ticker symbol ROKU. It's down about $33 from its actually, no, that might not be an all-time high, but from this high here on the 4-hour chart around 178, we're down from there, like I said, about 33 points, down almost 20%. And I know it's crazy to say Roku's in a bear market, but when a stock goes from its peak down 20%, that is what that defines as a bear market. I mean, technically speaking, right? And if a stock goes down 10%, that is classified as a correction, right? So at this point, we're between the correction and the bear market phase because we're about 18% down. So once 20% cracks, Roku, I know it's crazy, it's going to be in a bear market, right? So we might be able to get a play here in Roku on this weakness. And guys, I mean, they reported decent earnings. I mean, their earnings came out like a week or two ago. I forget exactly. But overall, they had EPS of negative 35 cents. So they lost 35 cents versus the loss of 51 cents estimated. So they beat there. And revenue beat as well. $356 million in revenue versus the $312 million estimated. And we've seen a sell-off, right? We've seen a sell-off. We're holding the 180 SMA overall as a support here on the 4-hour chart. And let's see if that holds heading into the next couple of days here in the stock market, right? So DocuSign is another one here. DOCU. This is a cloud company, right? Does a lot of stuff, and they're mostly known for their online signature platform, right? Where you can literally sign and you can do all legal documents and so forth. And they're doing a share filing, I believe, last I was reading. Let's take a look here. We're seeing a DocuSign filing shows registration for roughly 247,000 share common stock offering via selling shareholders. And that could be something worth watching. But overall, DocuSign is down from 230 down to about 189, 190, held the 180 SMA, and that's why I'm watching it, right? We're holding overall this uptrend, and at this point, we've been recovering ever since we held that uptrend at about 190. Now we're trading at about 207, up 4% on the day today. And for me, guys, I'm watching this 50 SMA on this 4-hour chart. I think if 210 can break, DocuSign could have a comeback back to 215, 220, even back up to $230. So watch it. Earnings are also coming up here on the 3rd of September. That's creeping up, guys. That's about 2 weeks from now. So watch DocuSign. Another one is Boeing, and judging Boeing on this chart, guys, I know it's been getting crushed. I mean, we're down a lot. We're down $200 here from the high on the 4-hour chart. And honestly, from back in the beginning of June at 240, we're down about $70 from there. So Boeing's been getting crushed. It hasn't been coming back like some of these other stocks, right? Not even close to some of these other stocks' performance. But if we're taking a look here as a swing trade, a potential swing trade, I think Boeing has potential, right? We're at a spot that has held at about $170 here. It's held ever since the beginning of June. We've held it once, twice, 3, 4, 5. Okay, one time we fell under 170. We went all the way down to about 157. That was after the earnings. And since the market brought us back, Boeing back from 160 back up to the 170 level, and we took out 170 as a resistance, what that tells me is, hey, maybe the market overreacted a bit to their earnings, and it readjusted the stock price. So we hit 160, broke 170, rallied all the way up to 190, and sold off like clockwork, right? You guys can see Boeing's been trading between 170 and 190. So at this point, if we hold 170, like we have a couple times, right? 6-7 times in the past, we could end up rallying up to 190. So I'm watching the move from 170 here on Boeing. That's if 170 holds. And if we do hold it, it could be a rally move back up to 180 to about $190. And some other ones here, I'm going to put these together. Activision and EA, they're not beaten down as some of these other stocks are, but they're still down a decent amount from their highs, especially Activision here. They had good earnings, $89 is where it hit. Now it's trading at about $82. That's $7 off the highs. That's around 8 to 9%. So that's a decent amount. I mean, if you use leverage and trade options, if that move completes, depending on what contracts you pick, you can make a lot of money trading options, right? You can also make a lot of money just straight up buying shares and swing trading it back up to the mid 80s, which is what I'm most likely looking to do. So I'm watching Activision here. I'm also watching Electronic Arts, down about, not as much as Activision, but it's down about 5% from its highs. Overall, we are holding the 180 SMA here on the 2-hour chart, and I believe on the 4-hour chart as well. But we're seeing a little trouble at about 142, which is where we've seen resistance ever since the middle of July. So I think, honestly, if 142 breaks, that could be, a breakout sign on EA back up to 148, back up maybe even a 150. And another stock here which has been running like crazy, and by no means has this one been crushed recently, is FedEx, FDX. But let me take that back. If you pull out a larger time frame chart, it's kind of clear that we were crushed in the past from 270 down to about 88, and this is kind of a snapback recovery for FedEx. It's kind of been long in store, in my opinion, for FedEx to see this type of recovery. So despite us doubling since this 88 low a couple months ago, I mean, we still have a lot more to go. The all-time high is around 270. We're at 206 at this point. So I'm watching FedEx to maybe rally up to about 215. That's a big resistance coming up, and we're already seeing a red day today, so that means we might be seeing a pullback. If we pull back here on the 3-year chart, you guys can see $200 flat could act as a support. So from 200 up to 215, that's where I'm looking for this FedEx move. And the last stock of the day is Intel, guys. I know Intel, you guys are like, Intel sucks, AMD, Team AMD. AMD's probably better. They have more growth at this point. They have future prospects that might be more attractive, but Intel, I think, is going to come back, and the seems like the market thinks the same. I mean, we're not seeing the market bid up Intel quite yet in terms of the stock, but what we are seeing is a lot of consolidation after that drop after earnings, right? We're seeing it hold $47, $48 like a brick wall support, right? So we could end up seeing a move out of here, maybe some sort of recovery play if it breaks $50. That's kind of the point where I'm watching. I'm going to put a price alert there at about $50 on Intel, and I think from there, I mean, this thing could slowly truck its way back up to the mid-50s. So I'm watching Intel very closely, and mind you, it is one of the more risky plays, I'd say, out of the bunch here, but still, it has a lot of potential. So overall, that is it for the video, guys. If you all enjoyed it, found value in it, I would really appreciate it if you hit that like button for me, and also just subscribe to the channel if you want to see further content like this. And check out all the free links down below in the description box if you want to join our free Strive Smart Discord chat, Facebook group, and if you want 2 free stocks from Webull valued up to $1,400. Those are also linked down below. The free money is literally waiting for you guys. All you have to do is deposit $100 using that link, and you get your 2 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.